Hey everyone, welcome to Live Trading Thursday. It's David Verbruggen with you again today. Got some good stuff to look at in the market with you as always. But you know what one thing that I've loved the most about the last few weeks is your guys' participation. You've been just rocking it with sending in tickers to look at. That's been awesome. Let's do that again, right? So if you got tickers that you want to look at, any trades that you want to look at, maybe ones that you're in currently or the ones that you're considering, you can even look at historical trades, whatever works for you. Right, go ahead and get those into see, there you go, Benjamin. I can't even finish my spiel, and Benjamin's already got a ticker in there. So we'll be starting off with that one today after we look at the market. So I love that, Benjamin. Thank you so much. Guys, as always, feel free to, or just remember, keep in mind that all these examples in this live training session should be viewed for educational purposes only and not taken as trading or investment advice. All right. We always start looking at the market, right? We're going to do that right now. We start looking at the overall market. Why? Because it kind of gives us a kind of a framework for which direction is the tide going, right? What direction is the current going, if you will? That kind of helps us determine better which direction should we be trading, right? So we're looking at the overall market now. You guys can see that here. Last Thursday, was a big move up, right? Broke up through resistance there, kind of turned around, came back down, market came back down, found some support at the 50-day. Nice bounce yesterday off the 50-day. Today, gap up. It's moved down a little bit, but still higher than yesterday's close. So I don't love the pattern necessarily. It's not the cleanest pattern, but what we can tell is that in the short term, it is slightly bullish, right? It is slightly bullish. So I would say, can we be bullish in this market? Yes, but you've heard me say it before. We need to be cautious. So, maybe that's a good way of putting it, right? If someone asks, hey, are you bullish or are you bearish? I'm cautious. But within that, I can be cautiously bullish right now if I'm looking at short-term trading positions. And I say short-term because there's still a lot of warning signs in the market, in our economy right now, that point to not just a possible, but a probable move down, a significant move down, right? There's many people that don't think this bear market is over, right? And so with that in mind, we want to be cautious and keep in mind that whatever we get into bullishly, or bearishly too, anytime, but especially right now, bullishly, whatever we get into, it could very well be stopped out the very next day or even later that day, right? Because at any time, you can start to get a big candle and maybe all of a sudden you get a big one like this and another one that follows. And then all of a sudden, by the end of next week, we could be down to this line. It very well could be, right? That's not out of the realm of possibilities. Always keeping in mind that risk, therefore making sure that our position size is correct. If we do those things, then we can go ahead and be cautiously bullish. All right, so I better stop talking about that because Benjamin's loading us up right here. So we're going to kick it off by looking at MEXX. I'm not actually familiar with this guy. Okay, I see it's a triple leveraged Mexico bull. So yeah, I'm not familiar with this particularly. I wonder if we can get some more information on that. It looks like it's a triple leveraged ETF on something related to Mexico. So here's the thing with leveraged ETFs. You kind of have to understand how they work. It's going to be too much of a conversation for this webinar right now. But whatever that this leverage ETF is actually based on, the leverage ETF, in a way, it's kind of a derivative of itself, right? Derivative in itself. So it drives its price from something else. Now, whatever that other thing is, if that price is choppy, kind of up, down, up, down, up, down, and not really going anywhere, a leverage ETF is actually going to be moving down a little bit, right? It's just how the math works. Because if you're up 3 times and then you're down 3 times and then up 3 times and down 3 times, you're actually moving down in price on a leverage ETF. So that might not make any sense for now. That's totally okay. You can research it. We can talk about it later, but just know that that is in play and that is what is going on. So with that in mind, you just have to understand that. Now, that doesn't mean that we can't throw lines on here, right? We can still grab a line. Ooh, maybe it's close to there. See what's been going on. You can make good money on a triple leverage ETF. I mean, look at this. October, if we'd gotten in here, we'd be more than double the price just a week ago. But then, of course, look at this, right? And I don't know if this is somewhat following what we're doing in the S&P, but look at this move down, right? Just 2 weeks ago, it was up here at 156, and then a couple days ago, it's down at 126. That's a major move down. When you're in a triple leverage ETF and the underlying price moves down, your triple leverage ETF gets crushed. It's like an option. It is leveraged. It's like an option. You can get option type of leveraging in a triple leverage ETF. You can also, in some cases, buy options on the triple leverage ETF, which means you can absolutely kill it if it goes in your favor, and you can get absolutely demolished too. You have to understand the risks. You have to understand what's going on. All right, so that with that being said, okay, yeah, if you're looking at this as a bounce, then maybe you could potentially get in. I'd be very aggressive on my stop outs, and I'd be very careful on my position sizes. All right, moving on, DEF. Let's take a look at this. Another ETF here, Invesco Defensive ETF. I don't know if that defensive is talking about inverse ETF or if they're talking about like a defense, like Department of Defense, those kind of defense stocks, if you will. But anyways, just based on the pattern, it's some nice sideways action. It's kind of, oh, okay. I mean, when it's kind of sideways, there's things you can do with that, right? I might just throw some lines on here. That's probably not the best line right now, but it's pretty close. It's kind of giving us an idea. Overall, in the last bit, it's just been kind of sideways to slightly down. Moved down quite a bit recently here, right? We got several candlesticks down, so not much we can do with that. I would want to see it pivot. Let it do its thing, come back up to this line and roll down. That'd be nice, right? If we had seen this line before and we had gotten in, say, on this day, that could be an entry. Now, we would have been frustrated when it came back up, but on the next day, that could have been an entry again, and that would have worked out pretty well. So potential for the future in DEF, but right now, just not at a good entry point. MRO, Marathon Oil. Let's take a look. This guy, look at that. I don't know if this was from this webinar or another webinar. Got a little, let me see. Do we have a position on this one? We do. Look at that. This might have been from this webinar right here. We have a bear call, and look at that. Actually, it went in the money, and I missed it. Technically, by the trading rules that I've mentioned before, how I like to manage credit spreads, this would be a stop out yesterday. Actually, even maybe the day before, it wicked into the money just barely. That being said, I missed it, right? This week has been crazy, right? I missed it. And right now it's out of the money. So what would I do here? In all honesty, I would not get out because at the price it is right now, it's still game on for me, right? It's not in the money. Now, that being said, I want to be very careful because as we're teaching people how to trade, I don't want people to get in mind, oh, I see it's in the money, but I'm going to pretend I don't see it so I can stay in because surely it'll come back my direction. That's dangerous thinking. And you might be thinking, I'm never going to do that. Oh, come on. I've done it. Yeah. I've absolutely done it. I've done that before where I see, that's past my stop out, but it's like, I'm going to pretend I don't see that. We do that kind of stuff, right? There's so many biases that are going around in our head. And so all that to say, we need to make sure that we are very diligent about keeping the rules. Now, what is something that I could have done better here? Well, I could have set an alert, right? I could have set an alert on here to notify myself. I don't do the greatest job personally of setting alerts on paper trades that we put on in webinars. In webinars, right? I'm managing other things, different things are going on. So I'm not always the best at that. I'm pretty good at catching it and watching it. I forgot about this guy. I forgot we'd put it on. So many lessons to be learned in there, right? I mean, this live trading session is not just about looking at stocks. I want to feed you some coaching items too, and some takeaways that we need to learn as well. So as it stands right now, we're staying in, but this could change even as soon as tomorrow. What if it bounces up? It goes in the money tomorrow. I'm getting out, right? If I see it, I'm getting out, right? I'm not gonna play around and just hang out. We've been in this one for a bit too, right? Now, one could say, hey, when we got in on this day right here, and it's broken this downtrending line, so it's broken the premise of the trade. And if that's your trade plan, like, hey, if it just breaks this downtrending resistance line, I'm out. Then yeah, then you could be out for sure. I like to give some cushion. I recognize I have a couple protection lines, although that 50-day didn't really do much for us now, did it? The 20-day didn't even either. So anyway, there you have it. That's MRO. Thanks for bringing that one up, Benjamin. Benjamin says, woo, that's probably not a ticker. That's probably just excitement. I don't think WOOOO is going to fit in there. Yeah, we looked at the SPX, Benjamin. We looked at that one already. Let's take a look at CVI. All right. Okay, so CVI is CVR Energy. And wow, this guy's been going down quite a bit. Look at that move. That was a rough move right there. And then been moving down since then. So obviously not going to get bullish on this guy, right? It hasn't. Let's try this. I don't think it's put the bounces for. Actually, I take that back. We can put that line there. So with that line right there, and sometimes we can do this too. We can clone a line and then see if there's a good support line. And that might be the best place. That's not the cleanest one, honestly, not the cleanest way. Actually, I dislike it enough to, I'm just going to take it off. But that being said, so we've got 1, 2, and 3 pivots on this line. So that confirms as a trend. That's nice, but it's too far gone right now, right? We've missed the entry point. Potentially one could consider a credit spread, right? A bear call credit spread. That's kind of the one I reach for if I've missed the entry point. Now, where would I put that? I'm liking the $26 as a short strike. Why? Because actually, I'm really liking that level. If we put a horizontal line right about here, you can see there was some support there, and then it's been resistance ever since. Resistance, 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 and then bounce down again. 20 days in play as well. And that's right about the 26. So if I can get a short strike at the 26, maybe a 26 by 27, going out to June 16th or so, that would be pretty nice. Let's take a look and see what we can get. Options, liquidity is good enough. Bottom of the green. We'll click on Friday 16th. And I mentioned, oh man, those are some weird strikes. Look at that. Oh, let's select all, see if that gets us anything better. No, look at that. Okay, so 20. This is really weird, guys. 20, and you got 21 and a half. All right, 22 and a half, 24, 25, 29, 30, 34. Wow, okay. Now, I don't like a short strike at the 25, right? If we did a 25 by 29, I don't think I like the, no. Look at this. That would put our short strike down here. And if we do the next one up, a 29 by 30, we're not going to get paid on that. Right? So let's try and bump this up. Boom. 29 by 30, we're not making any money. right? We'd have to get in the spread to break even. It's just you're not getting anything on that. Chart, not bad. Not bad, Benjamin, on the chart, but it's just not a good position right now for those options. Those are some weirdly weird strikes. I think if this comes down, pops back up, and then rolls down off of this downtrending resistance line again, then maybe a 25 by 29 could make sense. But yeah, not a huge fan of those strikes. It just didn't work for what we needed. But that's trading. That's trading, right? So, you know, our job is not to just find trades, it's to find the best trades. How do we do that? We eliminate the trades that aren't best. Simply put, right? But that's what we do. So this one wasn't best. So we're moving on. DFEN. All right. So Benjamin, I see a little pattern here, right? You're liking these triple leveraged ETFs. Okay. Now you can trade them to the downside too, right? If their options are good enough. Actually, liquidity on this guy is kind of, you know, middle of the yellow, not awesome. So you're just going to want to be careful on that. But daily aerospace defensible. Okay, 3 times triple leverage. Same thing I mentioned before with that triple leverage. It is, you know, it's if the underlying price is going sideways, then triple leverage is actually going to be going down slightly. So let's zoom out a little bit here. Actually, I want to get a big view. Well, that was 21. Nice move up. It's kind of following the market a little bit. Nice move up, and then a lot of 22 kind of down, and then kind of choppy lately here. But move down there. I mean, just a month ago or so, it was up at 22. Now it's down at 17. I also find it personally on these triple leverage ones, I find it a little harder to get solid lines drawn. I do see, with that being said, I do see this line right here. That's about the best I can see. So maybe that's a breakout to the downside, right? So maybe if this were to follow kind of a kiss goodbye pattern, pop back up, bounce down off that line and roll down, then there could be some potential opportunities to the downside. But let's look at this closer here. Let's look at the July expiration for puts. Pretty thin on the open interest, right? Pretty thin. I mean, this one is 101. Bid-ask spread is okay, not awesome, just okay. So yeah, you know, it's just kind of have to see at the time that you're thinking, hey, do I enter? What are things looking like, right? What are things looking like as far as the options go? Because that one, not great. I think it might just be best, frankly, especially with triple leverage ETFs, maybe just stay away from the options. I've had a hard time finding good liquidity. See, the one that I've looked at most is TQQQ. Triple leveraged on the on QQQ, so tech stocks, right? And you can see it's been moving up recently. You know, if you'd gotten in back at the beginning of the year, you'd be more than double for today, right? Or right around double. And the options I think are better. Yeah, see, it's in the middle of the green. So there are some out there, but the last 2 that we looked at weren't awesome on options. All right, Henry, thanks for being on. Henry wants to look at Boeing. Let's take a look at Boeing. All right, so Boeing had this nice move up and then just a lot of sideways action recently, right? Let's get rid of a couple of these guys. Actually, I just want a clean board of lines. These didn't last very long. Let's see what else we can get. Now this line, oh man, quick refresh. If it ever does that where it doesn't let you draw that line, just quick refresh, browser issue, and we're back in action. This could be something to consider right there. And let's try and clone that, see if that brings up something there. There we go. So here you kind of see that slightly downtrending channel, right? And where is it right now? Well, it's been moving down. It's downtrending, so I wouldn't trade it to the downside, but it's not even downtrending by a lot. I probably wouldn't even do a put on this, honestly. I might just do a bear call, because if it downtrends just very slightly, it's going to be harder to make money on that put. But a bear call could make sense after it bounces up and then comes back to resistance, bounces down, right? I might have liked the bear call on this day, May 19th. So last Friday. Last Friday, that might have been a pretty decent place to do maybe a 210 by 215. And then if we had done that, we might even have our 50% max profit right there. Very possible. So, yeah, that's just something to keep an eye on for Boeing. You know, throw that one on a watch list, keep an eye on it. Could produce something good later on. All right, Henry wants to look at CCJ as well. Oh, I got a lot of lines on here already. Kind of have a little bit of an ascending wedge action going on, although it broke through this line. I might end up getting rid of this line. Does that make more sense up there, maybe? Actually, I think it does. You can say that one again. See how that gap line right there, and then resistance, that might make more sense right there. Still kind of have a little bit of an ascending wedge action going on. Honestly, love to see that one broken before I really get too heavily invested. If it comes back down to here, potentially, you know, 27 by 28 debit spread could be considered. But I want to see it break this line before I get very serious about this. If it does that, you know, there's potential for some good things going on. Yeah, last earnings was better than the one before. So definitely some good things that I could be looking at there. You know, throw that one on a watch list as well. All right, Mark, I see you there. Mark says just got on. So how about NVIDIA? Yeah, let's take a look at that one. We haven't looked at that one yet. Let's look at NVIDIA. And wow, okay, NVIDIA. Big move today. Earnings. Look at that. They crushed it, guys. So earnings was yesterday. Now the big move didn't happen until today. So this is probably after the market closed yesterday that earnings happened, right? So NVIDIA, I mean, they expected, their estimate was 61 cents of profit per share, and they got $1.09. Last time was also an earnings surprise. You can see that gap up as well. So really interesting information there. Actually, this was a pretty nice pattern. The 20-day being support. Now we've kind of blown that pattern up, right? I mean, it really jumped up there. So what do we do with this now? We kind of just have to wait, you know, unless there's certain strategies that you know of. And we teach some of these strategies at TRADEway of how to handle situations like this, right? This wouldn't be ready to go yet, but maybe in a couple days, couple trading days, that is, there's some potential opportunities here if it doesn't run away on us. So this is a good one to throw on a watch list if you know what to do with it. Otherwise, you can still throw it on a watch list, but I'd wait for it to come back down, maybe to the 20-day. You can see how the 20-day just been some support. That day went a little bit below, but support there again. There's your bounce. There's a bounce. You know, 20 days has been pretty crucial for the better part of this year, right? So that's what I'd be looking for on NVIDIA. So that was a good one to bring up as well, Mark. Thank you very much. All right, Ruth, I see you on here. Thanks for being on. Henry wants to look at DKNG as well. DKNG, let's take a look. DraftKings. Okay, hey, we were just talking about the 20-day. Check this out. 20-day support. Just above the 20 days of bounce. Same thing there. But support held nicely there. And we're moving back down again. I'd watch this guy, right? What if it comes back down to the 20-day and puts in a bounce? Now, don't forget that last part. Put in a bounce, right? We don't want to just buy at the 20-day because sometimes it doesn't always do that, right? What about here? What if you'd seen it come down and you bought right there, but you didn't get a bounce? Well, then it moved down below, actually found the next layer of support as the 50-day, right? So if it does that, if it moves down below the 20, See if you can get a bounce off the 50-day, right? See this bounce off the 50-day? What if you had taken that 50-day bounce? That would have been really nice, right? That would have been awesome. So don't pregame it. Wait for that bounce. I love that it's coming down right now. Yeah, I love that the stock is coming down because it's coming back down to previous support levels. Let's see if it'll actually make that bounce again and give us an opportunity. That'd be pretty nice. We can throw a line on here as well. I know some people are really like to get that line on there. When it's using a moving average so tightly, sometimes I don't want to clutter it with a line on there, but you could put a line on there as well. All right. Ruth says, seems like everything is heading down and half of some broke through support. You know, I saw several of my uptrending patterns break support as well this week. But like DraftKings here, for example, this one's looking nice still, right? NVIDIA was also looking nice. And then, you know, this crazy move up on great earnings news that kind of breaks that pattern. But there are still some patterns out there, Ruth, that are actually doing pretty well, right? There are, but it takes some searching sometimes. It absolutely does. Hey, Gordon, I see you on there as well. Gordon says, oh yeah, CVR has no options, or CVI actually, only monthly ones. Yeah, they don't have weekly ones. All right, Benjamin. Let's see. I just want to, man, you guys are loading up the chat today. I love that. I love that. All right, we're going to look at just a couple more. All right, we're going to finish out with these last four here. We're going to go through them pretty quick, though. Okay, so the A shares of Berkshire Hathaway. This one's kind of crazy, right? It's kind of fun that Benjamin brought this one up because are any of us going to trade this? Have you caught it yet? What's the price per share? It's nearly $500,000. We are looking at the most expensive stock on the market, right? And I don't even think it has options because why? Can you imagine what that would cost? Yeah, no options on here. So Berkshire Hathaway, the A shares, there are this one. Actually, I think there's some crazy rules involved to even be able to buy this. I don't know if anyone can just go buy it. But anyways, I mean, you still see patterns, but the liquidity, look at that too. Average shares traded is about 5,000 right now. You know, there you go, 5,800. So does that meet our rule of at least 300,000? No, not even close. So few people can afford that, right? This is just one that never split. But then they have the Berkshire Hathaway B class. Did I type that right? Nope, I did not. I did not type that right. BRK.B. There it is. And this is more doable, right? Same pattern you're going to see. Let's get rid of that line. That one's not in play anymore. Same pattern you're going to see. Actually, almost kind of see a little bit of an M pattern right there. So I wonder if that'll start coming down. But it's within our price range, right? $319 a share. Still high, but it's not $500,000, right? And I am curious if they have, they do have options, decent ones too, is liquidity is in the green. But just based off the pattern, would I go buy this right now? No. Maybe if it produces a nice bounce off the 50-day, maybe, right? But with where it is right now, I'm not too terribly excited about it. If it breaks down, you know, they even M pattern with a follow through to the downside. So then I'd wait. So I'd be pretty cautious with that guy. All right, Hood. We'll take a look at Hood here. I know this one's been rolling nicely. You look at Hood, it's been just kind of in this, you know, pattern for, well, not the prettiest roll actually, but it's been trading in that range, going pretty sideways for almost a full year now. Where is it now? It did bounce up off support, but has been kind of struggling since. It might give you another opportunity. If you're aggressive, you could look at this still as an entry because it is up a little bit off of support. But I personally would have rather seen it bounce nicely like it did here, you know, and then start moving up. But it hasn't really done that. Let's look at some more history again. If we go back far enough, well, I got a couple anomalies. So yeah, I don't love necessarily everything that's done in the most recently here, because it bounced and then didn't go anywhere. So it's frustrating, because you want to be able to take advantage of that. All right, last one we're gonna look at today is GameStop. I haven't heard too much about GameStop recently, right? Did that whole crazy thing, what, year and a half, 2 years ago, or now, or whatever. And then it's been, came kind of back down to earth, right? $23 a share right now. Must have looked at this one recently, that's a weird panel. It's like a V, right? Hit the 200 simple. I think I remember talking about that. It was either this one or a different webinar, but the 200 simple has some possible resistance, and that's what it did, right? Hit that, and it's moved down. So earnings coming up as well, just in about a week and a half here. So not much to do on GameStop right now. I'd wait for earnings to pass. And then if you're bullish on it, I want to see it break that 200 simple. So there you have it, guys. All right. I love this. Is probably a record for the most comments put in on one of these live trading sessions. So that's awesome. That makes me happy. Good job, guys. Got a webinar coming up. It's a free one. I'm going to drop the link in the chat for you there. It is a webinar on how to protect your 401k before a market crash. So I know a lot of us have 401ks, and if we're still with that current employer, it can be hard because they don't let you really manage it, right? So what can you do? That's what this webinar is all about. It's actually going to be next week on Thursday, right before the live trading, Thursday, right? It'll be at 11 a.m. Central Time. So you can literally go from that webinar, and then right after that, they're usually about an hour. So you can hop right over to here. Right. Next week, it'll be someone else on with you. I'll be traveling next week on Thursday, but whether it's Jeffrey or Dave or whoever, I know they're going to do a great job for you there. So join for that and check out that free webinar as well. All right, guys. Well, be back with us next week. I will see you guys in 2 weeks from now. So have a good one. Thanks, everyone.